All right, everybody. Hey, welcome to Note Night in America. Glad to have you here. So, hang on a second. I would do that. Would escape just before doing what I need to do to stop it so it didn't get loud. There we go. Good stuff. Back to. Anyway, hey guys, welcome to Note Night in America. Glad to have each and every one of you join us here from all across the country. If this is your first time on Note Night in America, welcome. We're glad to have you with us, crazy folks here. Feel free to type in the chat for where you're from. If you're watching this on the live stream on YouTube, do the same thing whether you're live or catching the replay. Let us know what part of the country you're joining us from. We're always glad to have you. We've got people from all across the United States and all across the world that tune in on a regular basis every Monday night to tune in to a little Note Night in America. But anyway, guys, glad to have you all here. Hey, John Sherry from Rochester, New York, Shelly from Metro Detroit, RJ from New York City. New York City. But anyway, hey, Jim, good to see you, buddy, as well out there. But anyway, welcome to Note Night in America. This is the 11th year we've been hosting, 11th or 12th year that we've been hosting stuff on Monday night, whether it was conference calls going back to 2010 or the Monday Note or Note Night in America. Glad to have you here. We've got a great topic to talk about tonight. We'll get to that in just a second. Like I said, we've got a ton of great videos, replays out there for you. They're all, a lot of them are, the last 5-6 years are all on YouTube here for you to be able to watch and download. Make sure though you subscribe, and if you don't like listening here, you can also listen to these on your favorite podcasting platform. So make sure you hit the subscribe button. Also, all of our videos are on YouTube. Make sure you hit the subscribe button there. If you go to weekclosenotes.tv, you'll make sure you get just subscribed for Note Night in America. And then, of course, if you like a little bit extra content, we've got two amazing other podcasts as well. We've got the 50,000 megawatt blowtorch, the Note Closer Show podcast, and then we also have the Note Camp Live podcast or Note Camp Conference podcast with this is the 4th or 5th season for that one as well. So lots of places for you to learn from. Big thank you to everybody that was a part of our virtual note buying workshop that was this last Friday, Saturday, and Sunday. We'll have the replays out to that probably by tomorrow afternoon. They're all uploaded, just tweaking and put them on spot so it's easy for you guys to use. Our next 3-day virtual workshop is set for April 22nd through the 24th. That's right, the April 22nd through the 24th. We do these basically once a quarter. And if you actually go to notebuyingfordummies.com, we've got that special extra early bird special at half off right now. So notebuyingfordummies.com. And get signed up there. Actually get the replays to the last couple days. Start watching the replays, learning, and start actually taking a little bit more information, because actually the next 4 Thursday nights with us rolling this out, we're actually doing implementation coaching for those that were a part of the class. So you can watch the replays, learn, tag in or tie into the 4 weeks of a little bit more implementation, get rock and rolling. But get signed up for the next virtual workshop in 3 months. Ain't gonna wait there for you. It is we're honored to be here, guys, being the #1 investor recommended training for note investing. So honored that you guys have made us that. We'll keep delivering the content. You keep asking questions and you keep closing deals, ladies and gentlemen, and we rocking and rolling for you. But anyway, any questions before we dive in? Anybody got anything they're worried about or working on before we dive into the main content? Or you're just like, Scott, shut up and get to the main course. All right, quit teasing us with good music beforehand. This is not the Note DJ section. This is the show us how to make some real money. That's why you're here, right? Where's the money thing? Where's my money indicator? My little noise box. Yes. Yes. Money. We're here to make some money, right? But anyway, today's topic is all about making 6 figures, making 100K as a note investor. And for the last 4 or 5 years, we have always started a virtual workshop and done this once a year, also talking about how to make 6 figures, do like 250K in 12 months and that kind of stuff. And I went back and was looking at it and said, I need to tweak this up because not every deal is going to work right. Not every deal is going to be perfect for you. And so I think you're going to like this presentation tonight for you. Probably will go back to it, and feel free to use this as kind of your guide, your North Star, your compass in helping you, move into the note business. I mean, we all don't want to work our ass off and be on that treadmill over and over, the hamster wheel where you're doing the same thing over and over and over. And I think a lot of us have felt like that in some cases. Who knows that with, especially like the last 2 years. But making six figures as a note investor is not hard if you will plan it out and put the plan in place. Now, it's not going to happen overnight. We've always said note investing is not a get rich quick. If you think it's a get rich quick, you're in the wrong spot. Okay. This is not a get rich quick, but it is. You can build really great wealth. And I've got a very, very simple plan for you. You can accelerate this plan by exponentially or doubling your audience or doubling your marketing or doubling your deal flow. But basic stuff, I think you're going to love that. But anyways, let's talk about getting to the six figures in 2022. We actually went through this on the workshop this past weekend. I actually tweaked the slides since there. I noticed a few things now. So you may recognize this. Look, if you're the key to making six figures in 2022 is not difficult. No, you don't need to go buy $1 million property and flip it. That's one way to do it with one deal, but that doesn't really mean it's the best way. So let's break it down to basics, similar basics. There's still a lot of lower valued assets out there. And by lower value assets, if you're going to be in the note business long term, you're probably going to be buying in that $150,000 range or less of property value. And let's just assume some numbers, because yes, Scott, assume you make an ass out of you and me both, as they say. But what I like to say is, like, what do you need if you really want to be financially independent? What do you need coming on a monthly basis that will help you get over the hump where you can kind of go, I don't have to work. My bills are covered this month. I can do what I want to. Okay. So really, to get to, assume you need $5,000 a month in cash flow, that's 60 grand a year. You're going to probably be targeting initially to get your feet wet. And I'm going to show you some simple ways that this simple path can lead to big figures in an annual basis for you. Look, let's just start with, I like to look at the basics, is assets that have a $50,000 value. They're non-performing, that are occupied, okay, that I can pick up at 50 cents on the dollar. And yes, you can still buy assets at 50 cents on the dollar. You just follow up and you know where to look and stuff like that. This is what we covered in our 3-day class. But anyway, you're buying assets at 50 cents on the dollar of value, where we'll just say the unpaid balance is equal to roughly the value of the property. Okay. Or they owe a little bit more, because there are those out there behind. Okay. So you're picking these up at 25,000. You're looking for assets that are owner occupied, that are occupied with owners living in them. Yes, you could look at tenant occupied, totally fine, but you're not really chasing vacant assets, because we're wanting to build cash flow for you long-term with just the note stuff, where you don't have to deal with toilets, tenants, and trash outs. Okay. Obviously, rent rates are going to be a lot higher than the existing mortgage rate. In some cases in the past, rent rates were lower than what the mortgage payment would be. But for most of us, I'd say 90% of the country, rent rates on the same property are always going to be higher. Okay. Just keep that in mind. And we want to target existing payments in the $500 range. Now, I was talking with somebody earlier. If you're taking down a deal just for yourself, you're using your own funds and your IRA or things, especially non-performing, you want that mortgage payment, that principal and interest payment, to be at least $250 a month to cover at least the servicing costs. If you have a non-performing note and you're paying $90 a month, you still want to bring in close to, $170, $180. And then if it gets reperforming, definitely pulling in $200 a month. So we're still going to target that $500 range, which is double that. And you'll understand the reason why. You're going to always, with borrowers, if they're not performing, you're going to ask for them to bring some money to the table before you allow them to do a trial payment plan or to reinstate the loan. They got to bring some back payments. And I always like to collect 4 months of rent. Now you figure $500 a month P&I times 4, it's $2,000. Not difficult to find that out there. Okay. And we're going to use OPM, other people's money, investor money, not to partner with, but we're going to borrow that money on flat interest rates of 6%. And we'll get to that, why the 6%, because there's millions and millions. There's a lot more people out there that they're making zero or nothing or 0.01% in their accounts. There's no reason to be doing 12% anymore. If somebody's not going out and investing and finding themselves, don't give them something that you would work your ass off for. Give them something. Hey, it's still a good return, 5-6% for them in the long run. And we'll talk about why that's important for you. Okay. So get into it. So if you're borrowing the $25K at 6%, then basically you're paying your investor roughly $1,500 per year. And that comes down to $125 a month. 6% times 25K is $1,500 per year. Okay. and 125 per month. Well, if you're targeting assets to get to that, and where you've got 5K a month coming in, well, if you've got $500 a month coming in on these assets, and you divide that, take 125 away, so you're netting 375, but you still need to hit the 5K. So take 375 and divide that into 5K. That comes out to like 13.3 deals. Well, we're going to round it up because you don't do 0.3 a deal, right? To 14 deals. Okay. Now, if you figure this out, 5,000, look at that. I would screw that up again. Let me the one thing. So 5,000 divided by 375 equals to actually 13.3 deals there for you. So we'll just say you're paying your investor out of $500 a month that normally comes in on these payments. You're paying them 125 is paid back to the investor on their 6%. Okay. Now, if you take 375 a month times 13 deals times 12 months, that cash flow is going to come out to $58,500 in annual cash flow. That's the first step of making six figures. You're making $58,500 or $58,000 and a little bit more with that 14th deal in annual cash flow for you. Now, you're also collecting skin in the game, right? So 4 payments of $500 is $2,000 on average, some more, some less from the bar that you're putting that in your HIP National Bank. So if you figure you got 14 deals, 2,000 times 14 deals equals $28,000 in income. That number is going to bring you to $86,500. So 58.5 on the cash flow plus 28,000 equals the 86.5. Okay. Now that's just the first part. That's the getting people back on track is just the first part of the case study. The first part of helping you make six figures. Now, if you get people on track for 12 months, or you're buying some non-performing notes that you're going to make a pretty decent return on as well, too, above and beyond, that can also work for you. It doesn't always have to be non-performing. It can be some performing stuff if they fit the numbers. And that rough 500 is a rough number. Maybe some's a little bit less, some's a little bit more. It all depends on the statutes. I'm just trying to go average. I had somebody that reached out to me like, well, Scott, I have this portfolio. I bought 20 notes and the average payment wasn't 500. It was 400. I said, well, what's the average value? What was 40 grand? I'm like, well, you're a little light on that. If you go up a little bit higher, probably be a little bit higher. I'm just giving you some specifics to look at, generalities here for you guys. If you want to get specific on deals, you can get specific on deals, but I'm not going to. We're going to just go through this and just give you a bit of a game plan. So moving on. So if you've bought if you're buying $50,000 assets and you've bought 14 of these assets, well, that means you basically control a $700,000 loan portfolio. That's the fair market value. If they're worth 50 times 14, that's $700,000 in fair market value. Okay. And you've borrowed those at 50 cents on the dollar. So 25,000 times 14 means you basically have raised $350,000 in capital and funding. Everybody I know on here is capable of doing that. You're all capable of raising $1 million, but 350, yes, you can do that with your first 14 deals. If you're doing it now, yes, some of those will be higher, some will be less. Okay. But you're all capable of raising $500,000 in the next 30 days for sure. Okay. And you got to remember, the funny partner is getting 6% payments made quarterly. Now, I wouldn't do it monthly. I would do it quarterly because especially if you're using a lot of self-directed IRA money, they can't touch the money anyway. So monthly just makes it a little bit difficult. You might as well do it quarterly, save you the wire fee or process transferring fee. Okay. So the question people always ask, well, this sounds great, Scott, but how do I return my investors' money? If it's only, they want to get into it. We talk about short-term investments of 12 to 24 months. Okay. Short-term, 12 to 24, not 30 years as a note holder. Trust me, if you're paying them 6% regularly, they're going to want to be in there a lot longer than 12 or 24 months. But anyway, let's talk about how you return your investors' principal. If you've got a note that's been performing for 12 months, those now equals re-performing notes. And you can sell those notes at roughly 80% of the fair market. Remember, the unpaid balance is at or above what the value of the property is for this analogy here for you. So if you sell on your portfolio, $700,000 at 80%, that's basically you're selling those notes for $560,000 in your note sale proceeds. All right. If you've got notes at 8%, I guarantee I got people that would buy them at 8% from you all day long. All right. Now, those could be IRA investors. Those could be all other mortgage funds as well. If they've got 12 months of seasoning, yes, you got some people that will buy that. Okay. Now, you pay back your investor or investors who have lent you the money. You've paid them back their $350,000 and you've been paying them quarterly. So they're getting their $350,000 back and they've gotten their 6%. They're pretty freaking happy. They got 6% passively without doing any work besides investing with you. It's a flat loan rate. They're not getting any split of the back ends. They're getting their flat 6%. Yes, that's the biggest change in this. We don't talk about splitting in the back end anymore, okay? So you've got $210,000, $210,000. That's the difference between 560 and 350, and what you pocketed in note sale proceeds, plus the $58,500 in cash flow, plus the $28,000 skin in the game from 2 to 4 extra payments per deal. That number, anybody want to give me a drum roll, please? That number comes to $296,500 if you add those three up. Now, Scott, well, I don't think I can buy 14 deals in my first month. I get it. I get it. I don't know your actions. I know some people have bought 14 deals in their first month. I know some people are marketing for money. So it's whenever you really dive into this, maybe it doesn't. Maybe it's hard to figure out, oh, well, you can't find deals these days. Well, that's a bunch of BS because you can't. We are helping our students find deals every day that fall into this, helping them raise capital at 6%, helping them get the word out what they're doing. Literally everybody, it's if you just put the work in and start marketing, don't go in thinking you can't. Because if you think you can, like Henry Ford said, where you think you can or you think you can't, you're correct. And you've got to approach this like, I can do this. Now, let's talk a little bit more. So what is the funding? What does your investor get again? They got 6%. That's all they get. That's all, folks. They're not doing any work. They're not marketing. They're not showing up on Monday nights. They're not educating themselves on the different workshops or the different things they're doing. They're not doing diddly. So don't give them more than diddly. Okay. Give them their 6% or less. You got to realize that money invested into something that's not paying zero or has a negative percentage is a positive. With inflation being like it is, or they're paying fees on the accounts. Look, we talked about this filling your cup first 2 weeks ago, how like the best savings account in America, when you say best savings account, is 0.55%, is half of 1 point, or the best CD is at 0.7%. Okay. You're giving them at 0.7, you're still 7 times 8. You're getting them 9 times what they would get in the world's best savings account right now. All right. Bankrate.com, highest savings, it was Charles Schwab or Massachusetts, something like that, 0.7%, not 7%, 0.7%. So you're offering something that they're not doing, and it's going to be a win-win there for you. You are doing short-term 24 to 36 months deals, but hey, if they get it done in 12 months and you can cash them out, and they've been making on autopilot, what do you think they're going to say to you? Can I have some more, please, sir? Sir, may I have some more? Would you please keep my money in there? Because I can't go do this myself. Even though I can, I'm lazy, like most of America is, and I want something for nothing. So I'll take that 6%, but you've got to give me some more, please. Can we put 100 grand in this time? Can we put 150 grand? I know I only gave you 25 grand and I said anything, but I see that you're serious. I like what you're doing. Please, I have more money burning a hole in my pocket that you could put to work. Please, sir, please save me. Please save my dreams. Okay. You have the option to do it. They're making 6% without doing anything. I can't reiterate that enough. And this is been the biggest mind shifts, I say, the last 12 months that we've gone through. Because here's the thing. It's great to surround yourself with investors, but investors, we're all sharks. And I'm tired of paying 12%. And the minute I started marketing to other investors out there outside of the real estate clubs and other things like that, money got a whole lot cheaper, baby. So you're doing flat loan agreements at 6% for 24 to 36 months, no prepayment penalty, no points. It's a flat return on investment for you. And what you have to realize, ladies and gentlemen, is that a third of all money sitting in true self-directed custodians or trustees is probably making 0%. At least 33% or more from the folks that I've talked with at some of the major self-directed IRA custodians. They've got a 1.2 million under management, and over 400 million of that is sitting there waiting for somebody like you, waiting for somebody to come in and say, hey, I can give you 7 times what the bank is getting, or you're getting 0 in your account. How about we put in at 6% and get you doing something? Let's get off your keister and put your lazy assets to work. What do you say? Okay. Now, what's my thing doing here now? My PowerPoint just frees up on me. There we go. All right. There we go. Let's recap. What are you getting? $375 a month to you out of the 500 times 12 months times 14 deals comes to 58,500. Okay. You're collecting at least 2K of payments. All right. From the bar. And I think I might have the 58.5 off now that I look at this again. So 375 times 12 times 14. Yeah, it's 63,000. I'm off by, sorry, I don't know, $4,500. It's actually 63,000 is the correct number on that 14th deal, not 13. Like I said, I switched it a little bit there. I missed something, but you're collecting at least 2K of payments from the bar. 2,000 times 14 is an additional 28. You're paying your investor their flat 6%, which is coming out of that $500 a month payment. You keep for cash flow. If you want to keep for cash flow, great. You never got to sell it back if your investors are happy making 6%. Or if you need to, you sell the reperforming note and cash out your investors and you keep all the percentage. Up to you. Or you leverage what you got going on with assignment of collateral and go out and buy some more notes. All right. There's some great ways to do it. The whole idea of this is to rinse and repeat. Okay. Now, does anybody feel like they can't do that? Of the folks that are on here tonight or watching live, how do you feel about it? Can that be done? We're talking 14 deals. All right. Yeah, I think everybody can do that. That's basically, if you figured this out and did this almost one a month, just over one a month, by the time you got to next year, then you would have some deals flowing, and got some cash flow coming in. Now, I did take those numbers. I did take that and took it to another level for you. I was like, what if we were just to do the easy thing? What if instead of you going out and trying to do 14 deals, Craig or Kathy or Janelle, who's all watching on YouTube and stuff like that, what if instead of you trying to go do it all at once and getting burnt out, what if you did the slow and steady? What if you love your job? What if you love your career? This is just a hobby for you. What does that look like? If you did just one a month, you scratched your itch and did one a month. Well, it gets pretty big pretty fast. So I did that. If you take one performing note you buy one performing note for 2 years, that's 24 months. And that's what I did. I did one there a month, then you add another one a month. So each month you're adding in, you can see the cash flow really starting to grow. The first month it's 375, the second month it's 750. And that monthly cash flow grows quite a bit to up the point at the 24 month, you've got $9,000 a month coming in without really having to do anything. In the first 24 months, you would have brought in $112,500 in cash. That's then the number down at the bottom here. Okay. We call that the one note per month for 24 months equals 112,000 in profits and cash flow from that in the first 24 months. Plus, come the end, you've now got $9,000 a month on average, $108,000 a year on autopilot on those 24 notes. Now you keep adding more if you want to, or just, hey, I'm good. My costs are $5,000 a month. I'm good. I got shut up money. I got FU money. Try to take it away. You're good. All right. That's kind of a simple thing. You can run the math. Basically, 24 notes worth $50,000 each. It's basically $1.2 million in value. Yes, if you funded the same numbers, basically that's $600,000 in private capital for you. Okay. Yes, Janelle's loving this. Who else is loving this? Show me some hands. Show me some thumbs up. Pretty much a 6-figure year. Yeah, it takes a little time. Nobody said it happens overnight. Matrice Walters, you are kind of doing this yourself, buddy. You're already on the way to doing this. You're doing this with some of your notes, but also you're doing with some of your local mobile home stuff that you're buying and turning into rentals. You're basically doing it on a door-by-door basis, okay? This is totally what you're doing, Matrice. This is kind of your long-term path, okay? I think you're right. Well, you got 3, 4, 5 like that. Mike's loving this. This is Mike Breeze's favorite thing of the weekend. He's like, I have seen the light. I have seen the light. I am no longer blind. Okay. Montrace is up to 8 already. Yes, sir. That's awesome. Okay. I love it. I love it. I love it. I love it when the aha moments come in. Yeah, baby. Yeah. Yes. 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 Yes.
Yes.
Yes.
Well, yes. 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 Yes.
Yes.
Yeah, baby.
Yeah, baby is right. Yes, I get excited about this. Yes, I am a dork. I don't give a rat's ass. Kathy loves the chart. Yes, the chart's pretty easy. You can run the numbers yourself, okay? You can run the numbers yourself. If you have one note, it's basically paying you $375 a month. That's going to bring in roughly $9,000 a year for you on the one note. But that's talking about if you did that on autopilot, 24 notes times 375 is $108,000 on those notes coming in for you. Good stuff there for you. There you go, Janelle. Janelle's already. Show me the money, baby. Show me the money. Exactly right. All right. Moving on here. Now, I wish that was always the case. Let's say you're going to be an equal opportunity investor. You like performing and both non-performing notes. And I wanted to make this and make sure you throw this in here because if you're buying non-performing, not every deal is going to go the performing route. I wish every note I bought that was non-performing became performing. That's not the case. It's about 50-50. But let's say your goal is I need to make 10 grand a month in the next, profit the next 12 months. What's it kind of look like for? I need to make that over a year before I can leave my JOB. So let's look at it this way. Not every deal will perform. So we do this, say, okay, 50% will probably reperform and 50% will probably turn in a deed and lose, cash for keys, or foreclosures where you get some big checks, right? You foreclose out, you're getting a lump sum check. Half your income will probably be off the reperforming side. So we're going to just say kind of 50-50 based on your income. So let's talk about that. You take 60K on the cash flow side, annually it's 5K per month. We know what that number is. And then the other 60K, and let's just shrink it down to that you're getting $10,000. If you're buying a note that's at 20, you're buying a note at 50, you're buying it at 25, you're going to net 10 grand on profits. Worst case, you foreclose and sell it off like that. Not hard to figure out, right? Okay. Christopher Lingo says, loving it like McDonald's, baby. Yes, McDonald's. Call me McNoodles, okay? The McNote fun bunch here for you. We're the Happy Meal tonight for you. But anyway, so you got 10 grand per deal or 15 grand on the low end side. That's somewhere between 4 to 6 deals. That's the minimum I would do a deal to take a property back or to foreclose it to make 10 to 15. Now, there's times that we've gotten $60,000 checks in one deal. There's times that we've gotten 100 grand checks in one deal. Okay. I'm showing you what I would expect to be if you're going to play in that smaller market there, the 50,000, nothing wrong with that. 10 and $15,000 are nothing to sneeze at. Okay. I'll take $10,000 all day long. Okay. So let's talk about this. So if you need 14 performing notes to get that 5 grand a month cash flow coming in, plus 6 notes that you end up foreclosing on, that's a total of 20 deals, baby. 20 deals. 20 deals. Okay. Now, how many deals do you got to bid on? How many deals do you have to get there? This is the reverse engineering of breaking down your KPIs, your key performance indicators. And this is where most people struggle. People love the idea, but they don't like doing the work because nobody shows you how to do the work to build long-term stuff like we do. Okay. So if you need to close on 20 deals, all right, and it's actually going to go a little bit different. Obviously, it's actually technically like 2/3 turn into performing and 1/3 non-performing, but the cash flow wise, we could work all day here and divvy it up, but I'm giving you basically what it is. So 20 notes, most investors, most of the students that we work with, especially our one-on-one coaching students, they have about a 10% closing ratio. And that means you make 10 offers to get 1 approved. And this is why I always tell you, if you've been through my virtual workshop or note weekend, make more than 1 offer. You got 50 grand in your account. Guess what? Go make $500,000 of offers because they're not all going to stick. Even if they do get accepted, you're going to kill some through due diligence, through some values. And then you know what? It's going to force you to raise some capital and take your business to the next level. And the only way you grow is to get outside of your comfort zone. I think we can all agree to that, right? So, well, where did it go? There's a slide. So basically, to close on 20 deals, if you got a 10% closing ratio, that means that 20 times 0.1 means you need to make 200 offers. Well, that divides down to like 16 2/3 offer in a month. We rounded that to 17 offers per month or 4 1/4, basically 4 offers every week. And if you work and market like we talked about, whether it's going to some of the websites or marketing other note investors or dollar for dollars, you could be making 4+ offers a week. Now those numbers adjust as the values go up. Maybe you're not getting 375 on one note. Maybe you're getting 700. Great. If you're getting 500 on average versus the 375, that's 625 to your investor and 500 to you. I'm just giving you specifics so that you can work with. But that's not too difficult. 17 offers per month. That's 4.25 a week. 4, all right? 4 offers a week to get to that money range. How many of you guys will do that? Yes or no? Some of you will. Some of you won't. Some of you won't even raise your hand. Shelly's raising her hand. I know Shelly will. I know Mike will. I know other people will. But you have to put that work in, okay? You got to put that work in. And I know the folks have gone through the virtual workshop. Great. Glad to have you. Any questions about this before we dive into some other stuff there for you? Any questions about the target, the numbers, where the hell, what kind of crack I was smoking when I came up with this? It's good to see you. See some new names on here. See some names we haven't seen in a while, which is awesome. Okay. So we'll let you guys type in your questions and comments there for you. Wanted to let you know a couple of things here while you're typing your questions. We have something we have not done in a while. We didn't do this during the last 2 years with COVID, but we have been, we're going to go back to our VIP days, our one-on-one VIP day with Scott. And if you'd like to come to Austin, spend a day with me one-on-one, there's a way for you to do it. There's a bit of a cost, but it's a great investment for you. Some of you guys and gals out there, you're like, hey, I want to get, if you want to put this plan in place, you need somebody to sit down with you and kind of show you where to go. If you really want to do that, you might check out the VIP day with Scott. Now, what's a VIP day with Scott? As you ask your questions here, it's a day here in Austin with me, one-on-one here in Austin, Texas. You fly in, we spend a day focused on your business, usually doing it Tuesday through Saturdays. If we need to do it on a Sunday, we'll make an exception for you in some cases, but usually Tuesday through Saturdays, not Mondays. I prefer not Sundays, but if we do, good. So any day, the week there for you. It's a full day focused on you and your business, your goals. Yes, you can bring your spouse, your existing business partner, your assistant. If you really want to turn this into a great thing, but you don't like, Scott, I'm a good starter. I'm a good rock and roller. I don't really think I need you hand-holding me for 8 weeks. I think get rock and rolling. And then you probably want to check out the VIP day. It's great for the self-starters. We do ask that you've taken our virtual note buying workshop. If you have not taken that, we'll throw that in with part of the bonus of this for you. You got to go through the basics. The last thing I want to do is be telling you what a note is on a VIP day, because normally I charge roughly right at 10 grand a day for coaching. If you're going to come in and spend a day with me by itself, and you're going to take me away from schedule, it's not me putting somebody else, not an assistant. This is me pouring myself into your business. It's normally 10 grand, 99.97. Okay. Well, we're doing a special pricing because we're rolling this back out. We're knocking $4 grand off it. So it's $59.97. You can split that up into $2,000-$3,000 payments, or you can sign up for it once. You can get signed up at notevipday.com. Somebody asked, well, Scott, can you tell me about the one-on-one coach? I'll get that in a second. If you come for the VIP day and you love it, and you're like, I think I want to take this to the next level. Let's take our relationship to the next note level, Scott. Yes. We'll let you apply that $59.97 to our one-on-one coaching. We'll talk about what's in the next level with our one-on-one coaching here real fast for you guys. It's 8 weeks of one-on-one training with me over Zoom, live, 5,000 plus asset managers, 12 hedge fund managers, a year in our mastermind membership, a year in our WCN crew. We'll help you with raising private capital. You get VIP access to me. We'll do 2 days with me in Austin, Texas. If you come in for the 1 day in the VIP, yes, you'll get 2 additional days later on. We do a 6-month, 1-day follow-up on Zoom, and we'll work with you to help you find your deal and put your business in place for you. Help you start it off. Montrese can vouch for that. We've helped them get rocking and rolling on that. Catherine Bell, others out there, Larry Hoffman. I could go on and on and on of people that we've helped take this plan and implement it to make things rock and roll for you. Yes, it's a bit of an investment, just under 20 grand for that full coaching year-long program for you. Yes, we'll do. We can split up over payments and stuff like that. We also have a 24 to 36 month financing plan for you guys that you might be interested in taking a look at. Okay. Kathy Gwynn asks, how many assets do I have in my portfolio? I got a bunch. I have a bunch. Okay. If you want to finance your one-on-one, hey, don't just log off. Oh, I may not qualify for this. There are some places for you to take a look at that. And these are some questions to ask. Have you made 40K plus in the past 2 years? Are you at the same job for the last 2 years? Do you have at least a 620 FICO for you? If you answer yes to all 3 of those, you would probably pretty good chance for you to get approved for our third-party financing. and where you're going to finance the full one-on-one over 2 to 3 years if you want. If you want to stretch it out, or you can stretch it out over the 2 to 3 years payment plans. And guess what? Your payments will be less than $500 a month on average. There's no prepayment penalty. You could finance this with basically on a 36-month term and then pay it off in 90 days, pay it off in 120 days. There's no prepayment penalty for you. So you can qualify for minutes. If you're interested in that, you guys can go to this website, bit.ly Scott's Coach, and see if you apply. It's very, very easy. It only takes a few minutes, not even a hard pull on your credit. It's a soft pull. You'll see if you get approved in just a few minutes or a couple hours, depending on who's reviewing it stuff there. But they're literally doing some amazing stuff, and our students are just rocking and rolling. But there's the link in the chat roll for you. Robert asked a question. Once you get proficient, how long are you spending to get 4 to 10 offers a week? Not very often, Robert. If you got your systems down and you put your marketing in place and contacting asset managers, 4 to 10 offers a week are not hard. It's a matter of you just taking a little bit of time and going through it. Offers does not mean full due diligence. Okay. Full due diligence will take a little bit longer, but there's no reason to spend full due diligence on the front end when half or 80% of your bids are going to be accepted. So we show you how to get some front end due diligence done, get some numbers, run some formulas for you, and get rocking and rolling on that and get those bids submitted, and then come back. If they accept them, great. Then you're diving into due diligence and spend a little bit more time there, ordering some BPOs, ONIs, and probably whittling. If you got 20 accepted, probably whittling those down to 10 to 5 and going from there. So not difficult, 4 to 10 offers a week. Look, there's websites you can go to look at 4 to 10 offers a week. There's servicing companies that are sending out tapes 4 to 10 offers a week. So if you're interested in that stuff, check it out. Glad to help any one of you guys take your business to the next level, because you are all worth making 6 figures. I know that's one of the biggest goals of most people out there, is to take what they're doing and do something they enjoy. You all love real estate note investing. I get it. You just got to have a plan of action. Too many people are out there wandering around the desert like it's the wild, wild west, just firing off at things, and they don't have a game plan or goals or somebody to help guide them along that path. And if you're interested in getting guided along that path, check out the VIP Day with Scott. You can get signed up at vipday.com, or notevipday.com is the link for that. Or just, hey, shoot me a message, shoot me an email. We can jump on a call and talk about that. But ladies and gentlemen, you are all capable of closing on 24 deals over the next 24 months. We've seen it happen a lot. I would say maybe not hundreds of times, but we've seen it happen plenty enough for those that are students that are serious about taking this, that follow their KPIs, follow their plan of action, whether they're working full-time as a note investor or they're still working full-time in their JOB. We've seen people close on hundreds of deals in a year, and there's no reason why each and every one of you can't do that as well. So go out, take some action, everybody. And, we're kind of a short night. Unless there's any other questions for you, that's Note Night in America. Any questions from online on YouTube? Any questions from here as well on Zoom for you? Great. Then check it out, guys. Love to talk with you. And thanks, Larry. Keep up the good work, everybody. And we'll see you guys all at the top as well. Somebody asked me a question. All right, what was the slide? Let me pull that back up for you, because somebody asked the slide for the VIP Day. There you go. Boom. There's a link, notevipday.com. There it is. But I'd love to have you spend a day with me. We have a lot of fun. Trust me, Montrese, people that come spend a day with me like, oh my God, I just learned from a fire hydrant all day long, but your business is rock and roll and taking things to the next level. So Shelly, we'll see you Thursday night. RJ, see you Thursday night. Get signed up, guys. We're running that 50% special off of the virtual note buying workshop for the next time we host it. But otherwise, go out, have a great weekend, great week, and we'll see you all at the top, everybody. Bye.